Bonjour tout le monde. Bienvenue au Théâtre National de la Presse. I'm James Cudmore. I work for CBC National News, and I'm a director of the Parliamentary Press Gallery. It's in this capacity that I'm here today to moderate this news conference. Joining us today, as you can see, is Mark Carney, Governor of the Bank of Canada. Welcome. And his Senior Deputy Governor, Tiff Macklem. We'll start off with a statement and then head into questions. So, all yours.
Okay. Thank you very much, James. Good morning, everyone. Tiff and I are very pleased to be here with you to discuss today's monetary policy report, which we just released. Start out by noting that global economic growth has evolved broadly as the bank had anticipated in January. In the United States, the economic expansion is continuing at a modest pace, with gradually strengthening private demand, partly offset by accelerated fiscal consolidation. Les autorités ont procédé à un important assouplissement des politiques au Japon. Par contre, l'Europe demeure en récession, l'activité économique européenne étant bridée par l'austérité budgétaire, le bas niveau de la Conférence et les conditions de crédit restrictives. Après s'être redressée pour s'établir à un rythme très vigoureux au second semestre de 2012, la croissance a ralenti en Chine. Les prix des produits de base touchés par les producteurs canadiens restent à des niveaux historiquement élevés et, malgré la volatilité affichée récemment, ils ont, dans l'ensemble, peu varié depuis janvier. The bank expects global economic activity to grow modestly in 2013 before strengthening over the following 2 years. Following a weak second half of 2012, growth in Canada is projected to regain some momentum through 2013 as net exports pick up and business investment returns to more solid growth. Consumer spending is expected to grow at a moderate pace over the projection horizon, while residential investment declines further from historically high levels. Growth in total household credit has slowed, and the bank continues to expect that the household debt-to-income ratio will stabilize near current levels. Now, despite the projected recovery in exports, they are likely to remain below their pre-recession peak until the second half of 2014. And this is owing to restrained foreign demand and ongoing competitiveness challenges, including the persistent strength of the Canadian dollar. On a quarterly basis, growth in Canada is expected to pick up to about 2.5% in the second half of this year. Despite this expected pickup with weak growth in the second half of 2012, annual average growth is now projected to be 1.5% in 2013. The economy is then projected to grow by 2.8% next year and 2.7% in 2015, with the economy reaching full capacity by the middle of 2015. Now, this is later than was anticipated by the bank in January. Total CPI and core inflation have remained low in recent months, broadly in line with our expectations in January. Muted core inflation reflects the material excess supply in the economy, heightened competitive pressures in the retail sector, and some special factors. Total CPI inflation has been restrained by low core inflation and declining mortgage interest costs, with some offsets from higher gasoline prices. Both total and core inflation are expected to remain subdued in coming quarters before gradually rising to 2% by mid-2015 as the economy returns to full capacity, the special factors subside, and inflation expectations remain well anchored. Des risques à la hausse et à la baisse semblables à ceux annoncés en janvier pèsent sur les perspectives d'inflation au Canada. Les trois principaux risques à la hausse ont trait à la possibilité que la croissance de l'économie aux États-Unis et dans le reste du monde soit plus forte que prévu, que la reprise des exportations canadiennes soit plus vive qu'anticipé et que l'investissement résidentiel au Canada affiche un dynamisme renouvelé. Les trois principaux risques à la baisse sont liés à la crise européenne, à une faiblesse prolongée des investissements des entreprises et des exportations canadiennes, et à la possibilité que la progression des dépenses des ménages canadiens soit plus faible. Dans l'ensemble, la Banque estime que les risques sont relativement équilibrés au cours de la période de projection. Reflecting all of these factors, the bank today maintained the target for the overnight rate at 1%, and with continued slack in the Canadian economy, the muted outlook for inflation, and the constructive evolution of imbalances in the household sector, the considerable monetary policy stimulus currently in place will likely remain appropriate for a period of time, after which some modest withdrawal will likely be required, consistent with achieving the 2% inflation target. And with that, Tiff and I would be happy to take your questions.
We have some time, but as always, I ask that you limit yourself to one question and one follow-up. And if I haven't got your name or your agency right, excuse me. Greg Quinn from Bloomberg will start.
Governor, what can you say about the plunge in the price of gold this week? What does it say about that asset's status as something held by national treasuries and gold's role as an economic barometer?
Well, maybe this will say something about both those elements of the question. It's not a market that we follow closely, the gold market. There are certainly special characteristics to that market. Broad direction. At times, it is a coincident or reaffirming indicator of risk aversion. Gold certainly can be. You had a curious situation this week where there was an adjustment at a time when there was some surprise in economic data, so I would say that that's more reflecting of the specific market dynamics within that market. But from a central bank perspective, from a Bank of Canada perspective, there are a variety of other commodities which we follow more closely, not just because they're important for the Canadian economy. You can think Canadian heavy crude and natural gas as two obvious examples, lumber prices as a third, but because they're more indicative and better leading indicators of global growth prospects, and one would point to some of the base metals in that regard.
Today's report makes a lot of mention of investment prospects, prospects for business investment. You cut the forecast for that. Earlier you had mentioned the concept of dead money that companies need to invest. Is there more reason for companies to be cautious now about making investments?
Well, I think what we're seeing, and we drilled down on this, and I think you probably saw there's a box in the report which captures a bit of the investment outlook, is that the reasons for business caution have shifted a bit, and they've shifted more to fundamental factors as opposed to policy uncertainty. If you went back to the middle of last year when there was an intense period of uncertainty over Europe, and there was growing uncertainty not just over the U.S. election, but really about U.S. fiscal dynamics, the so-called fiscal cliff. The combination of that was conspiring to weigh on the prospects for investment, not just in Canada, but more intensively in other major advanced economies. We, in our conversations with businesses and in our survey evidence, the BOSS survey of the bank indicates this pretty clearly, and we've reproduced some of it in the report, is that the concerns are principally around the prospects for demand as opposed to this sort of vaguer policy uncertainty. And I think the good news on the financing perspectives of firms, at least in Canada, and we've reconfirmed this through our senior loan officer survey, is that concerns about access to credit are quite limited in this country. So that's a positive from a financing perspective. You don't have to pre-position a bunch of cash on your balance sheet because you're worried that your bank isn't going to be there when it comes time to invest. Let me bring this all back together to the forecast, though. What that survey evidence tells us with other hard data indicators, recent performance, is that we have taken down our profile for investment in Canada. We think that it will take a bit more time before momentum is built south of the border, momentum returns on consumption. We think we're seeing that now in Canada. But as that momentum builds up, before that investment accelerator starts to kick in Canada.
Rudy from La Presse. I'm sorry, I don't know your last name. Rudy.
Bonjour. J'aurais deux questions. La première, c'est concernant le prix des matières premières.
Oui.
On a eu un effondrement par suite des données de croissance de la Chine en début de semaine.
Oui.
Il y a plusieurs économistes qui prédisent que c'est la fin du super cycle. Est-ce que c'est votre avis et pourquoi?
C'est une question. On commence par noter, comme je viens de remarquer, que les prix des produits de base et surtout des prix des produits de base qui concernent le Canada demeurent, même après cette action dans le marché, ces prix-ci demeurent au niveau élevé par rapport à leur moyenne historique. Premier point. Deuxièmement, en somme, les prix sont à peu près les mêmes qu'observé en janvier, le dernier rapport de la Banque du Canada. Mais dans la projection de la banque, en ce qui concerne les prix non énergétiques, il n'y a pas une forte augmentation de prix par rapport au starting point d'aujourd'hui. Les futures curves, les courbes à l'avenir pour les produits énergétiques, il y a une réduction probable. En ce qui concerne le super cycle, cette fameuse super cycle, c'est la position de la Banque du Canada que les fondamentaux de la demande qui existent encore dans les marchés émergents, ces fondamentaux vont persister pendant un certain temps. Et à cause de ça, par conséquent, les prix de produits de base demeurent à un niveau relativement élevé par rapport à leur moyenne historique. Mais ce n'est pas une prévision d'une forte augmentation de ces prix. Dernier point. Il y a un défi ici au Canada en ce qui concerne les prix pour le produit brut au Canada, the Western Canada Select, à cause de la volatilité qui est accrue maintenant pour ce prix-ci. Et ça pourrait avoir un impact sur l'investissement, cette volatilité accrue, même si le prix est maintenant plus élevé qu'avant.
La deuxième question, c'est relativement à votre billet. Est-ce qu'on peut dire, compte tenu de l'état de l'économie, que votre billet, présentement, il est neutre ou vous considérez que c'est toujours modérément hawkish?
Évidemment, s'il y a la possibilité d'une augmentation de taux d'intérêt, c'est pas neutre. Mais c'est absolument clair. C'est une question oui ou non. Merci.
Louise Egan from Reuters. Sorry.
Well, to follow up on Rudy's question then, I mean, this tightening bias that the bank has had has been in place for a year, even though it's been watered down over time. Some people thought it might be removed altogether today, and it wasn't. So how do you justify that, and how much of that tightening bias has to do with a desire by the bank to tell consumers to stop borrowing so much money?
Well, a couple of things. One, as you say, I'll say it slightly differently than you did, but the bias has been adjusted over the course of the last year as the economy has adjusted with time. And we have tried to be very clear in our reports, in our communiques, in our speeches, why that bias is in place. And in effect, what we're trying to communicate both to market participants, but really to Canadians, what are the factors that would influence the adjustment of interest rates, and that the likely outlook or the likely prospect is that interest rates will rise after a certain time in order to achieve the inflation target. And obviously the ultimate issue here is the achievement of the inflation target. One of the factors that does influence the path is the evolution of the housing market, the evolution of household balances. In this respect, monetary policy is complementary to other policies that have been taken, most notably by the federal government in adjusting mortgage insurance rules, but also by OSFI in tightening underwriting guidelines, and it's supporting a constructive evolution of the housing market. That reality, and it's not all decided in terms of the full path of the housing market, but we're encouraged by what we're seeing. That reality provides a longer horizon, a period of time before an adjustment would need to be made. But I think the final point I'll make is that we need to go back to the context here. Interest rates are 1%. We have a financial sector that is as resilient as any in the world, is functioning very well. There is slack in the economy. We call it material slack, but it's not that big, and it's certainly not that big relative to other major economies. And we do have a very clear inflation targeting mandate, and we have a forecast which goes out to 2015. So the hurdle in terms of proper communication and transparent communication to Canadians, isn't that high to indicate that that after a period, based on several factors which we list, the next move is likely to be up.
Second question has to do with the G20 meeting that you're heading
Yes.
to after this. The MPR says that the strong Canadian dollar has been influenced, among other things, by spillover effects of global monetary policy. Japan is on a lot of people's minds. How concerned are G20 policymakers like yourself about the spillover effects of Japan's monetary policy, and what do you expect the G20 to say about that?
Well, I think the G20 will be very consistent. I think what's happened in Japan is consistent, and in the spirit of the measures, to be more specific, taken by the Bank of Japan are entirely consistent with the G20 communique of Moscow. This is monetary policy that's directed at domestic objectives. They become a 2% inflation target, or much like the Bank of Canada, and they've taken steps in order to achieve that target. They've taken bold steps. We think that net, if you put it in terms of Canada, net, the steps of the Bank of Japan are net positive for Canada. The additional demand that's created in what is the third largest economy in the world still offsets some of the redistribution of these flows. Now, obviously, for Canada, in terms of foreign monetary policy stimulus and positive spillovers, steps taken in the United States are much more important than steps taken in Japan, given the trade links and other links. But still, it's net positive for Canada, and we think it's net positive for the world.
Gordon from FP.
Hi, Governor. First of all, welcome to what I think will be your last presser in this building, unless you're going to come back for a special announcement at the same time.
Okay, thank you.
Speaking of spillover, the reports, there's a lot of emphasis on the U.S. and its recovery and the spillover effect that could have in Canada.
Yeah.
It seems that there's a lot of emphasis put on that in the report. When might we see some of that spillage?
The spillover from the United States? Well, we are seeing some of it. I think one of the things which we tried to draw, and we get more specific on a couple of aspects. First, in terms of the housing market recovery, and we give some effectively an elasticity that we expect that given the growth that we expect in housing over the course of the next couple of years in the United States, we see about 1% added to the rate of export growth in Canada, and there's still considerable operating leverage, if you will, in the Canadian lumber market. The second thing, though, which is key to the forecast, is that we take some time to assess export performance in Canada historically over the course of the last year. It's basically the driver of why growth was lower than we had expected. And that's true across the board. Some of it was energy, special factors, temporary shutdowns in Newfoundland, in Alberta that unwind. But it was also in non-energy commodities, and importantly, it was in goods and services. So we haven't recovered as much, or we haven't exported as much, given a certain amount of growth, U.S. growth, foreign growth, as we had historically. So what we've done is we expect the U.S. to pick up, and for example, vis-a-vis the IMF's forecast today, we expect the U.S. to be a little stronger than the IMF does, and that has a flow-through on in exports, but we don't expect it to have as much of, in our forecast, we are not taking as much of that growth as we historically would have. And that's why we have an upside risk to exports, basically. We're building in a competitiveness adjustment. I think it's laid out quite quickly quite quickly for that matter, but clearly and quickly, the way you like it, in box 4 in the report.
Paul, you expect 2.7% growth by 2015. A deadline somebody else has for balancing the budget. Is there something you know that we don't know?
I think Mr. Macklem would like to answer that question.
Well, fiscal policies are not our domain. I mean, what we're focused on is providing the right amount of monetary policy stimulus to achieve our inflation target. And, I mean, if you just go back to our projection, why do we think growth is going to pick up? I mean, it really comes back to the core drivers are investment and exports. Housing, it has slowed. It is declining. That's welcome. That's intended. It's roughly on track to where we thought it would be in January. Consumption continue to make the biggest contribution to growth, but consumption growth is moderate going forward. It's prudent. Where we see the pickup is coming through exports. As the governor was just mentioning, we are seeing a strengthening of private demand in the United States. You're not going to see it as much in the headline numbers because there's a fairly large fiscal contraction in the United States, but that private demand is positive for our exports, some strengthening in emerging markets. And then with some delay, a pickup in investment. I mean, the underlying conditions for investment are very positive. Interest rates are very low. Funding, there's very good access to funding. The persistent strength of the Canadian dollar makes buying foreign machinery and equipment cheaper. So the table is set. There's some the uncertainty on demand, both domestic and foreign, is weighing on firms. But as the export demand comes down, as some of that uncertainty goes down, we expect to see a recovery in investment. So you put those things together, we've got growth picking up to sort of 2.5% second half of this year on a quarterly basis, 3% next year, and then that gives you the annual average that you started with.
We're looking at probably more questions than we have time for answers. So if you don't need your supplementary, drop it. Laurie Graham from CBC Television.
Mr. Carney, hi. I'd just like to talk to you about tax havens, if I may.
Okay.
First, what impact do you think offshore tax havens have on the global economy?
Well, they hurt the integrity of the global financial system, and as a consequence of that, and they diminish the effectiveness of national fiscal policies, which have a consequence of putting more tax burden on those individuals, importantly, but also factors of production. If I can talk as an economist, factories, housing, firms that are only resident in one country, putting more of the weight of and responsibility for paying for government on them. And that tends to lead to inefficiencies. So there's no question that they undermine, they reduce, I should say, the integrity of the system, and there's an unfairness to them that also has an economic consequence that plays out on the fiscal side. And that's one of the reasons why the FSB and others have worked to bring so-called non-cooperative jurisdictions into the global fold, share information, and in effect reducing the number of secretive tax havens. And that's part of the reason why this issue is coming more to the fore now. And I should note that Tiff, in his work at the FSB as one of the chairs of one of the important committees, helped to lead that work with the French, I believe, yeah.
Well, perhaps you might be able to answer it, either of you. But as a follow-up, various leaders, there's lots of discussion now as a result of the leak, the revelations from the offshore document leak that happened last week. Various leaders are coming out saying there needs to be swift action. I mean, what is your position? What can be done to deal with these tax havens?
Well, this is well beyond the realm of monetary policy.
Exactly. That's why I gave it to you.
With respect to, just slight sidebar, with respect to what the FSB has been doing, the focus of the FSB has been not so much on tax, but it has been ensuring that as all the major jurisdictions of the world raise the standards for financial regulation, that those don't get arbitraged away by smaller states. And so making sure that we put in place what are called cooperative information exchange agreements so that they aren't secretive, and so that we have line of sight to these economies. I mean, in terms of tax havens, there are tax treaties, tax exchange of information that can be done, and you certainly want to move away from this sort of secretive activity.
Yeah. Namela?
Governor, this is your last MPR, and it's quite dovish slashing forecasts for this year. It's like weaker since the recession. I'm wondering, and you've pushed back the closing of the output gap by 2 years. I'm just wondering how you felt having to preside over such a report, and are you frustrated that you still can't? That you still can't raise interest rates. You've been talking about. I mean, it's happened in the past. You've said you'd raise rates, but you've had to drop that bias. And
Two things. First, no, there's no emotion in creating a forecast. I mean, our job is to come up with our best view of what the most likely outcome is for the global and Canadian economies, and then set policy appropriate to that. There's not a certain path. I mean, we don't put emotion into it. Our job is to be objective, and that's what we are here. And given events and given all the survey evidence and hard data and what's happened recently, this is, we think, the right forecast for the Canadian economy. Second point, quickly, is what is the point of the forward guidance on interest rates? Part of it is to be very clear about the factors that will influence policy. So we were clear about the importance of the output gap when the gap was very narrow. We were clear about the relative role of housing and the evolution of household balance sheets. And we're trying to be clear about, and also to be clear to Canadians about the likely direction of rates so they can plan accordingly. And the reason we do all that is so that observers, market participants, people will have a different view on the outlook for the Canadian economy than we do. Some will be more positive, some will be more negative. If they know how we're going to react to those factors, they can then factor that into their decision making.
What advice do you have for your successor? And question, Mr. Macklem, are you interested in the job?
That's two questions, so I'm going to take the first one, and we're going to skip the second. And I wouldn't presume to give advice to my successor. Whoever's chosen, I'm sure, will be fully capable of discharging the responsibilities. How's that for moderating?
There you go. Good job. Les Weddington.
I wanted to ask you, what's the one thing that you've learned, I mean this seriously too, the one thing you've learned other than perhaps the limitations of economic and monetary policy during your period as governor? Is it, for instance, the way the economy's changed? Or is it more difficult to deal with globally in terms of a sort of post-industrial thing? Does Canada need a new approach to industrial strategy? I mean, what's the one thing you've discovered?
If I had to pick one, it would be which was reinforced, is the intensity and the breadth of the interconnections in the global economy. So Canada is very much tied in to the global economy. What happens globally deeply affects us, and global doesn't just mean United States. I think I was aware of that before, but just the intensities of those interrelationships, that then leads to a variety of things that you listed, but I won't go into detail on them in terms of not just monetary policy, financial sector strategy, but broader structural policy.
And does the lack of reluctance, you talked about consumers cutting back, governments are cutting back, exports are a problem. Does the reluctance of business to invest, is that a kind of a hole in the whole economic picture? I mean, that wasn't expected?
No, I think we detailed here the biggest shock has been over the course or change over the course of last year has been the shortfall in export performance. That's related to previous lower investment or lower productivity growth of businesses. Part of it's demand driven, but it's there. I would note that one thing Canadian businesses have been doing is hiring, and they've been responsible for the vast majority of full-time hiring in this country and above average wages. So, there's a broader dynamic that needs to see more investment. Our view is we're not going to see that acceleration in investment until we see that pickup in demand, the pickup that we're expecting, and we don't have that high a bar for it.
You were okay, is that right?
Well, I was actually,
Julian from Canadian Press.
I was actually wondering, since this economy is so dependent on exports going forward with housing and consumers dampening down. Why not go all the way, and why not give the exporters a break by lowering rates at this point and affecting the Canadian dollar, which you say in your report is one of the drags on exports?
Well, we have a clear mandate for monetary policy, which is to achieve the inflation target. And clearly we're of the view that the stance of policy where we will provide considerable monetary stimulus by keeping rates basically at the same level for a period of time, then followed by an adjustment, an upward adjustment at some point, and to some degree, unspecified degree, is the right strategy to achieve that inflation target, and also to reinforce very important other measures that have been taken and are having effect to ensure that our challenges, Canada's challenges in housing and household debt, are properly addressed. So that's a pretty long list of reasons not to do what you're advocating.
I just underline that monetary policy is very stimulative. Policy rates at 1%, and one of the reasons for that is the headwind coming from the persistent strength of the Canadian dollar.
The governor's okay with just a few more minutes, so we've got two left. Matt Little from Epoch Times.
What do you think of credit controls as a way to deal with the household debt problem?
It's suboptimal in the sense that once you put them on, I mean they're a blunter instrument. We have to. I mean, obviously we want to make sure that the underwriting standards, we want to make sure the CMHC and through the banks ensure that the underwriting standards are appropriate given the exceptional circumstances consumers find themselves in. In other words, very low rates, but taking out very long-term debt that ultimately will be repriced. So we'd prefer to focus it there as opposed to actually allocate. And so we're very supportive of the approach that's been taken. And again, don't want to put up the mission accomplished banner, but the direction is right, and we are seeing a constructive evolution.
John Geddes, please.
Governor, you both run marathons and lived in the Boston area, so I was wondering if you had any personal reflections on the bombings this week.
Well, I think the first, the obvious reflection reaction is tremendous sorrow and sympathy for the victims of this, them, their families, others who were traumatized by it as well, but obviously those who are most affected. This is a senseless tragedy, and propagated by a cowardly act. And I think one of the characteristics of Boston and America writ large is resilience in the face of these things, and we've seen it in the recent days. And we look, I guess, stand in solidarity with them going forward. It's an unusual question, but that's how I would sum it up.
All right, that's it. Thank you very much, Governor.